Next, we refer to the comprehensive example. Trius Nugraha involved in supplying frozen beefs. The information given was for month of May 2019. On 1st May 2019, the company had stock of 50 kg beef worth Rm 150 per kg. The following were the transactions carried out by the company until 31st May 2019. So this is the transaction in May 2019. Okay, first we record based on FIFO method. We must provide this column, which is date, receipt column with quantity, price per unit, and amount for each issue, and finally is balance column. On 1st May, we record the opening balance, which is 50 kg at Rm 150 per kg. This info is from the question, which is on 1st May 2019, the company had stock of 50 kg beef worth Rm 150 per kg. So this is the opening balance. Next, we look at the next transaction on 2nd May, which is issued 30 kgs. Therefore, 30 kgs at price 150. We only have one batch of stock, so we just issued this batch of stock at Rm 150. So 50 minus 30, then we get 20 kg balance at Rm 150. Next, receipt 60 kg at Rm 160. So we record on 5th May 60 kg at Rm 160. So we need to carry forward the previous balance of 20 kg at Rm 150, and then next batch, which is 60 kg and 160 kg, the new batch here. On 12th May, returns to store, which is material issued on stock issued on the 2nd January, 10 kg. So return to store meaning we receive the stock. So 10 kg, this is stock in, which is 10 kg at Rm 150. So we record, because this is the same batch of this one, so we total up here 20 plus with 10, 30 kg at Rm 150. And next we need to record the newest batch is 60 kg at Rm 160. On 15 May, issued 80 kgs. So we send the first batch of 30 kg at Rm 150. So we need another 50 kg, which is we take from the next batch of 60 of Rm 160. So 50 kg at Rm 160, the balance is 10, which is 60 minus with 50, then we get 10 kg at Rm 160 per kg. Next transaction on 22nd May, return to supplier 5 kg. So return to supplier is the stock out, meaning we have to put at the issue column 5 kg at Rm 160. So the balance is 5 kg at Rm 160, which is 10 minus 5, then we get 5 kg. On 26 May, receipt 120 kg at RM 220 per kg. So we record at receipt 120 kg at RM 220. Then we carry forward the previous balance 5 kg at RM 160 and the new purchase, which is 120 at 220 per kg. And on 29 May, issued 100 kg. So issued meaning the stock out. So we must send the first batch, which is 5 kg at RM 160. So the balance 95 we take from the next batch, which is at 220. So 120 minus with 95, then the balance is 25 kg at price of 220 per kg. And finally, stock count. There is only 15 kg stock. So we only have 15 kg stock, but the records show that there is 25 kg. Therefore, the difference between 25 minus with 15, which is 10 kg, is considered as stock loss, which is at price of 220. So the balance of the stock at the end of the month is 15 kg at a total amount of 3,300. Okay, next is based on weighted average. So on 1st May, we record on the opening balance. 2nd May, issued 30 kg. So since it's one batch, so 30 kg, 50 minus with 30, then balance is 20 kg at RM 150. On 5th May, received 60 kg at RM 160. So we record the purchase at receipt column 60 kg at RM 160. But in the balance column, we need to average this price. So how to average? 3,000 plus with 9,600, which is 3,000 plus 6,900, and 20 plus with 60, which is 80. So total up here and divide by 80. So we get 157.50. So we need to average every time there is purchase of new stock. On 12th May, return to store or issued on, which is issued on 2nd January, 10 kg. Okay, return to store meaning receipt 10 kg. So this stock on 2nd January, meaning that the value is from the opening balance, therefore 150. And then we need to average the balance, which is 80 plus 10, which is 90, and then 12,600 plus 1,500 divided by 90, then we get 156.67. On 15 May, issued 80 kg. So since we have 90 kg, then we just send the 80 kg to the production at the price of 156.67, and then 90 minus 80, then we get balance of 10 kg. Next is return to supplier on 22nd May of 5 kg. Return to supplier is the stock count, which is at issue column. So 5 kg written at the price of 156.67. We only have one price, and then the balance of 10 minus 5 is 5 kg. At price per kg is 156.67. And next, on 26 May, receipt 120 kg at RM 220 per kg. So at the receipt column, we record 120 of 220 per kg, and then 5 plus 120, then we get 125. So for the cost per unit or price per unit, we need to average, which is 783.35 plus 26,400 divided by 125, then we get 217.47. On 29 May, issued 100 kg. So from 125, issued 100 kg at the price of 217.47, and then the balance is 125 minus 100, balance is 25 kg at 217.47. And on 31st, stock count is 15 kg. So if you refer, previous balance is 25, now it's 15, so meaning there is 10 kg difference of stock loss at price of 217.47. And finally, the closing stock value is 3,262.05. Advantages and disadvantages of FIFO method. Advantages: easy to understand and easy to use, as it is a systematic and logic. Practical for large size of material purchases. Able to prevent stock deterioration and obsolescence because the older stock will be issued first, and the closing stock value is based on market price. Disadvantages: during inflation, the production cost will be lower due to all the stock to be issued first, which is lower cost. Difficult to monitor the movement of stock if there are frequent materials purchased. Difficult to make comparison because the material costs are different from batch to batch. During inflation, profit will be higher, and this not reflecting current price. Advantages and disadvantages of weighted average method. First is advantages. It is a realistic, easy and less complicated, and easy to make comparison because there is only one price. Disadvantages: not reflecting actual purchase price. Stock discrepancy or stock loss. Stock loss is from previous calculation that we identify the difference between the record and the stock count, so that is a stock loss. Sometimes the value of stock recorded on the store ledger card may not be the same with amount of stock left in store at the end of the month. Any differences in store ledger card and amount left in store will be called stock discrepancy. If stock discrepancy takes place, the stock in store must be checked and corrective action must be done immediately. This is important to prevent stock loss